Welcome to Trading Lounge and the Asian Report. We're going to be covering the S&P 500 and also the ASX 200 in a bit of detail. So with the S&P 500 here, we're looking at, in the bigger picture here, as the wave 3 here, an A and a B and a C for wave 4 here. And then we've counted 5 waves up here as wave 1, and then we're looking for an A wave, a B wave, and a C wave that can still pull back to the 61.8% mark, but we would expect it to come closer towards the previous low or the 2000 here. If we were wrong, then the little move up through here would only pull back 61.8% and then move up there. So we're actually looking at a bullish picture here. In the Australian market, we're looking at more of a bearish picture. So just on the, well, there's also the, we're going to be looking at the ASX 200 on a weekly chart, which is a much bigger bearish count. But it would be unlikely to see the S&P 500 continue to move up in a strong third wave, while we see Australia move down in a third wave to the downside, making new lows, so to speak. So either one of them is right and one of them is wrong. Okay, something that I have to work through. If this one here was wrong and it was going to go into a big bear market, then the way to look at this would be a little bit odd, but basically down for 1 here, and then an A wave here, a B wave here, and a C wave here, and then down for 1, back for 2, down for 3. So a much bigger picture unfolding here for this market. It would kind of line up with the European markets to a point. But anyway, it's a bit of a dilemma that I have. Currently in here on the 2-hour chart here, we can see that we were looking for a top to come into play here, and that seems to be in play here. So we're looking for this market to either do two things: pull back down to the 50-60% retracement level here, or have a larger move down towards these previous lows here in 5 waves. I don't know which one of these are going to be the case just yet, and they'll both have the same count coming into the first wave down, second wave and third wave, 1 and 2 and 3. So for a while they're going to have the same count. So it's something that we need to work through, and it's not like it's retested. This trend up here is in 5 waves, and we count the 5 waves to finish it and all the rest of it, but it hasn't actually rejected this level yet. I mean, a rejection from this level would be here and then failing. This could obviously come down further here, but coming back and testing that and failing from that point, that's the rejection, and that's the confirmation that we will be either in this scenario or this scenario. And in the bigger picture, as I just explained, it could be a much larger bearish picture as well, but there's not really a lot of evidence for that at this stage, certainly not a strong bias. But looking at the Australian market now, we've always had that, where are we here? Too many charts on this template. There we go. So on the weekly chart here, which I just want to sort of shoot the breeze about a little bit, is that from this wave 3 top here, which would have been it's a very large wave 3, I think, that started pretty much back in 74, 75 sort of area, and looking at this wave 4 here, so basically a wave 3 to wave 4 here, and of course this was the GFC that kicked it off in the A wave, so to speak. So if you know your Elliott a little bit, we can view this as the A wave, and then an A and a B and a C wave here for the B wave, and then down for the C wave. So that's basically sort of how I see it, and we'd always looked at this moving back up to the 61.8%, which was moved a little bit higher, but not like a big deal, so it's fine. If this was going to continue to be an impulse wave to the upside here, then we would need to look at this as wave 1 here, ABC for wave 2 of 1 degree, and then the next smaller degree as a wave 1 here, and then an A and a B and a C back for wave 2, into this little, this here as, so all of this up for wave 1 here, and then it pulls back to the 50-60% mark in here. But that's what a wave 1 would do as well. So So yeah, and this counts better as a 5-wave structure down through to here. On CBA, however, it counts better as 3 waves down here, as a corrective wave down. So if I've got this whole count here wrong, it would be that this would be wave 1, this would be wave 2 of a particular degree of structure, and then even though this one is bigger here, it would be wave 1 of the next smaller degree of structure, with wave 2 coming here and then building up this way. But it just doesn't sort of seem right, you know. So we've always sort of had this particular wave count here, and as always, you know, it is a big deal, but it's also not a big deal because we can always work through it until we get to a point where we know where we are. But really what I wanted to talk about today is that it's highly possible that this wave 2 can be in place now. Okay, so what we need to look at is, you know, what can occur here and what we should do and so on here. So we were looking for this to move down to as wave 1 into the 50-60% area, which we've got. And then we were looking for 3 waves up here as an A, B, and C. And if I go to the daily chart now, we can clearly see that the move up there here as, you know, moving into this 50-60% sort of area here is, well, it's done its job, hasn't it? And it moved quite strongly through here, and then it really started to sort of, you know, when a market gets tight, it has a beginning, a middle, and end, and it starts to churn, and that's what it's doing at the moment, you know, and it's turning in line with the European indices and also the US indices as well. With the US indices, we're expecting them to pull back, you know, and the European indices to pull back, you know, to their 50-60% sort of area. So if that's going to be the case, then we'd look for a move basically down to here into the 50-60% sort of area and the trend line channel and all the rest of it, and then a move up there. That's what the US markets are telling us. But this whole pattern up here really suits better as an ABC, because the first leg in here is actually corrective. It's in 3 waves, not 5 waves. I suppose we could count that as wave 4 here and wave 5 here, possible, but that just suits better to being, you know, not part of that. So yeah, look, bottom line is that we're either going to be moving down into this area here with the other markets, but at the same time, I think we need to be you know, mindful that a much larger picture can be unfolding here, like a intermediate wave 3 to the downside. So you know, it will be a bit nerve-wracking coming down here, but it is a point where if you've got portfolios in the share market and all the rest of it, it might be worthwhile looking at hedging the situation until proven otherwise, you know. Of course, you know, at what point would we call a bear market in? Well, if we, you know, when this big move came down here, we were looking for it to move to the 61.8% mark. So if we get 5 waves to this point here, or 5 waves to this point here, then you can be assured that we will be in a bear market at that point. If at this 50-60% area here, if we just get 3 waves down to this here, then it's likely we've got like a corrective pattern here, but I wouldn't be able to confirm that just on those 3 waves alone. It would have to move up here, you know, past the 61.8% mark to confirm that. We may be able to pick this up in stocks and so on at this point, at that point. But yeah, so what I'm saying is that, you know, if you've got large portfolios, we're in a situation now where, you know, this market can start edging lower from here. Of course, if this level here, the 5,000, became the retested resistance, then of course we're going to be, it will obviously be, you know, bearish at that point. But, you know, that's a long way down, you know, at this point. So, yeah, so look, this is the 50-60% retracement area here. This is where we're kind of expecting the market to move down to. If it moves down in 3 waves to the 61.8% area there, then we know that it's bullish. But if it moves down there in 5 waves, then we've got a bearish picture on our hands at that stage. And you know, where we would look to short as well on these 5 waves down here, and we'll be shorting before that, of course, but, you know, in terms of protecting portfolios, you know, whatever, then this 5 waves down here, we don't have to act straight away because we would get the bounce back up here at between 40 and 60%, say. So then that would be the time, once we can confirm that too as a double confirmation, 5 here, 3 here, we have that double confirmation, and then we can move lower, you know, make decisions at that point here. So anyway, here comes the first flag that there's a turning point in play here. I'm just going to cut through to the 2-hour chart here now because we don't need to go to the 4-hour chart. So look, from this wave B down here and looking at wave C up here, it's never been a really great fit, but it's parts of it we understood clearly and parts we didn't. So, but at the end of the day, in putting all this together, it's wave 1 and 2 here, then the third wave nice and long and strong, and the fourth wave can be to here on the cash market. This was the high, so this wave 4 could realistically be over here, but I think it counts best as wave 1 here, then an A wave, and then 3 waves up here as the B wave, and then 5 waves down as a C wave for wave 2, then wave 3 up here, and then an A and a B and a C here for wave 4, and then 5 waves counted up here. And yesterday we counted that we could have 5 waves to this particular point. If not, then we've got a bigger picture to the upside there, okay? But looking at the US markets and European markets, then this is the best fit here. Now, of course, what we want to sort of, what this situation is about here is that, first of all, from this low to this high here, if we were wrong, then this is the point where we would be wrong, and this 61.8% mark where the market is now, you know, if this, just remove this. So let's just say, for instance, that that I was totally wrong, and this, we would look at, this is wave 1 from this low here, this would be wave 1 here, and then this would be wave 2 coming into here. Okay, so that's at the 61.8% mark. So we'd need to see a move from here roughly straight up to there into wave 3, 4, and 5. So, you know, we could probably go there if the market moved up above the 61.8% mark from these lows here. So it's a bit of a game of ping pong here actually, but this is just one way when you're unsure about things or really want to get confirmation. This is a good way of actually doing it. So we could say that if we were wrong, that 5400, so that's the 50-60% retracement level here, and then we always drift to the closest largest number. So we could say that if this 5400 here became the support, then we're in a bullish mode from that point. Okay, as simple as that. So that sorts that out. So I'm just going to remove these here. We don't want to make it too, it's all complicated enough, let alone make it more complicated. So if you're shorting, then you'd also want to put the stop above that 61.8% mark here, above the 5.4 here. Don't put stops on whole numbers. I should make a video about stops. I will. So as it stands at the moment, what we're looking for is, in a nutshell, we're looking for 5 waves down to here, and then that would give us the, we can fine tune this of course, and we will. So in this case, we'll get back on track. This is the 50-60% retracement level here, so we don't need that. And would be looking for 5, 3, and 5 structure coming into here. That would all be group 2 area in there. And then the market would see 5 waves down to this point with another bounce off here, like a ball bouncing and hitting the ground for the second time. And then there would obviously be another one, and then it would move through. And then, you know, well, that's basically the pathway, but probably prove me wrong, but it'd be something of that nature there. So that's what we're looking at here. So in terms of shorting, there's lots of opportunities to move into this, and obviously today will be down with banks and so forth dropping as such. So if you see the market move down into this area through here, then we can look for the bounce here and get this, take this one here, and then look to also add here. So we can build in a trade through here as well. And you can probably even use this market to hedge any long equity trades that you have in the market as well, in terms of actual shares, that is. Look, that's it at the moment. So if we do see a move down past the 61.8% mark here, then you'll know that this move down to here will be wave 1, and then we'll be looking for the wave 2 to come back into this area here as a little ABC pattern, and onwards from that point there. So, and don't forget to use the all the sub levels in here. We can have a quick look here on the 15-minute chart to see how it's panned out here. Let me just see. It's moved along a little bit. This sharp break here, I'll have to pick this up on the cash market, I think. I mean, it's already tested the 5.4 there, so it doesn't need to go back there. So it's likely to any retest is back to the 70 to group 2 here, and group 2 well enough now. So that's 65, 72, and 80. That's going to be the next area of resistance in here. So I can leave. If you're going to short, then look at this zone here as such. All right. Well, that's it. Thanks for tuning in, and let's see how this unfolds. As always, we need the evidence. So the first piece of evidence is actually being able to work out 5 waves from the top down to the 5.3 here. We'll be looking at that with the main drivers of this in terms of our banks, and our banks are connected to the carry trade, so we can look at the Aussie yen and the US yen and so on in this point. So we'll start to pull all this together and see if we've actually got a change in trend. At this stage, we're just pointing it out that it's highly probable, but now we need to gather the evidence, and then we can look to move in on the short side, which should be over here. So no need to panic, plenty of time to do research. Let's just start pulling it together. Cheers.